Hey, this is Rajat Bose here. We are here to present our 12th issue of Market Review, Market Outlook comprising the Nifty, the Bank-Nifty, the cnxmidcap. Apart from that, we would be reviewing 3 stocks where things are not really that good. And there would be 2 more recommendations. 2 more recommendations coming for this week. Those are new stocks. Now we are going to present the market outlook using 3 indices as usual. There would be 75 minutes chart, there would be 125 minutes chart, there will be 15 minutes charts as required, apart from daily and weekly charts. Now we come to the Nifty. To start with, this week had been quite an eventful week. Bank-Nifty, Nifty posted new highs. They showed a lot of volatility, yet lots of stocks were posting new highs. Some stocks, of course, did not perform so well. So we come to the Nifty. We start the analysis with the Nifty weekly chart. Nifty weekly chart shows that it is pretty strong, and the close on last Friday was 19,745, which is almost 700 points higher than the 9-week moving average. And if you look at the weekly chart is not showing any kind of weakness. So going by that, I would say that at least on the weekly chart, there is no signal that the Nifty is going to show any kind of weakness unless there is a big fall and the 9-week moving average is taken out. There is no reason to be bearish. We look at the daily chart. Once you look at the daily chart, see a strange thing happening. Strange thing is that when the high was made at 19,991, only 9 points were left for people to celebrate the 20,000 mark being touched or exceeded by the Nifty, but that did not happen. It did disappoint so many people who were ready to celebrate. But the day, that is the last Thursday, it was a major upswing that day. It opened with a gap up and then shot up to 19,991, and after that it closed almost around those levels. Now the situation is that the very next day it opened much lower, around say 19,800, and finally what we saw is that on that day it went up. It didn't even test on Friday, it didn't even test 19,887. It touched a low of 19,700 and finally closed at 19,745. It is a weak close, no doubt, and this weak close may give us some apprehension that the Nifty might actually seek lower levels. But if you look at the daily chart without thinking about anything else, you will notice that the 9-day exponential moving average has not been tested by the Nifty in the month of July. In the month of July, it has not been tested. So at least there needs to be a test of the 9-day exponential moving average, which is currently at 19,670 on the daily chart. If this gets violated, at least we require 3 consecutive closes below that. If that were to happen, great. In that case, we would say that at least some kind of a correction is happening. Whether we like it or not, a correction would be pretty healthy. But this is actually a humongous bull run. so far we cannot say that there is any major probability as such. Only thing that I would like to comment here is that I have studied, or at least I have seen the charts, at least at a glance what I could see on those charts. Most of the stocks in the Nifty 50 as well as number of stocks in the Nifty FNO segment, there about 50% of the charts showed a lot of negativity. So there is a possibility of some kind of a correction. Let's see whether the correction really pans out. But remember this thing, unless you see at least 3 consecutive closes below the 9-day exponential moving average, do not just consider that a downtrend has begun or a downtrend is very much probable or something. It is possible that there could be a correction, but nothing is plausible or probable. Now finally we look at the 125-minute chart of the Nifty. What do we find? Look at the upper right hand corner. The last three candles are the last July 21 candles. The 3 candles comprise the whole day. First one is the gravestone doji, and then there are 2 hammer lines. These hammer lines, the last one almost tested the 20 unit moving average, but it did not. It went up and tested the 9 unit moving average and closed almost around that level. The 9 unit moving average was at 19,805 and it closed at 19,780 real time, but the adjusted close was 19,745. Going by that, we would say that at least in this 125-minute chart, the 20 unit moving average should be taken down at least for 5-6 sessions. That is 5-6 125-minute candles below the 20 unit moving average would signal some kind of a correction. Prior to that, do not even think that correction is imminent. As I have already told you quite a few times, that the Bank Nifty is the one that is not performing the way it should be. It is the problematic character. So let us see how Bank Nifty has performed, whether it has the ability to match the performances of the Nifty and the cnxmidcap. Now we come to the Bank Nifty. Look at the upper right hand corner. You see a doji pattern on the daily chart. This daily chart doji pattern means that the open and close on the last Friday, the difference between them had been for only 12 points. 46,063 was the open and the close was 46,075, and when it is 46,000 level, only 12 points, we can consider it to be the same level, and the chart also is showing like that. So this is a doji pattern. Doji means indecision. Doji means the trend again might get halted and there could be some kind of a consolidation. That is possible, because on Thursday the kind of movement that we saw in the Bank Nifty, that suggests that there could be some amount of consolidation in the early part of next week. Now what we see is that on the daily chart, this indecision would be taken out once the high of the day, that is 46,369, that is the all-time high for the Bank Nifty. If that is taken out any day next week, then this doji would be negated and further upswing will continue. Here also you will notice one thing, that a week back the Bank Nifty was posting everyday lower closes. From there it got a renewed strength, shot up over the last 6 sessions. There had been 2 large green candles, so it got rejuvenated. So even here we need to say that till such time the 44,500 mark is not taken down, if that is taken down, that is taken out on the downside, then only you can think of a correction setting in. Otherwise, even though we sometimes falter in the sense that we think that the correction has already started or almost begun, but it showed that till such time the 20 unit moving average or 20-day moving average is taken out, the Bank Nifty will not signal any kind of a serious correction. So chances are, just what it has been doing, the dips may continue for a few days, but after that there could be another jump. It is a kind of a have money will buy market. So whether it is the foreign institutional investors or Indian investors, since they continue to buy, the market can continue to go up. So we need to watch out. Of course, initially we need to watch out the 9-day exponential moving average level of 45,491, and after that the 20 unit moving average level of 44,942, that should be watched out for. And once these levels are broken, then think of that some weakness is really visible. Otherwise, all dips are likely to be bought. Now look at the weekly chart. Weekly chart shows major strength in the sense that there is a big green candle at the upper right hand corner. This green candle is actually last week's trading, and last week the Bank Nifty performed brilliantly. It came from behind. It was the laggard. The cnxmidcap was leading the charge, Nifty following it, but Bank Nifty was the laggard. Now this laggard is performing the best in this week. Next week we might see that Bank Nifty might try to get past the 46,700 level. 46,700 level is a crucial level. If that is taken out, then we can see further upswing. Immediate target could be 47,500 in that case, but it can even go further up. That is the thing. Finally, when we look at the weekly chart, the thing that I was relating to you people, that is visible. While there is indecision, look at the Bank Nifty 125-minute chart. Shows that there is a gravestone doji and followed by two hammer lines. But in this, the Bank Nifty did not even touch the 9-unit moving average. So this being the case, the Bank Nifty showed that it has acquired newfound strength. And unless it falls below the 45,900 mark, there would not be any modicum of weakness. If it were to fall, then we need to see whether it falls below the 20-unit moving average at 45,450. Roughly that 45,500, 45,450 level needs to be broken for any kind of correction setting in. Otherwise, continue to think all dips would be bought. For the first time this week, the cnxmidcap showed a little bit of jittery, at least in the initial phase. So let's see how has cnxmidcap performed this week and how is it going to perform going forward. The index that has been leading the charge for so many weeks since late April, we are talking about the cnxmidcap 100. cnxmidcap showed two doji patterns, doji crosses, which is encapsulated within the upper Bollinger Band, upper 20-unit Bollinger Band, and the 9-day exponential moving average. 9-day exponential moving average has been tested, but the 20-day moving average has not been tested, and mostly the movement is continuing within the smaller band of 9-day exponential moving average and the upper Bollinger Band. What does it mean? This means that the uptrend is still very much alive and kicking, and unless we see the 9-day exponential moving average is seriously violated, at least for 3 consecutive sessions, or at least the 20-day moving average. 20-day moving average is broken down. 20-day moving average is currently at 36,081. So 36,081, if that needs to be broken, then we need to see another 720 point fall, which is roughly 2% fall from the current levels. Unless that happens, the CNX midcap would not be heading for any kind of a correction. In fact, in CNX midcap, we should be wary of saying that a correction is setting in, because there has to be a major breakdown with heavy volume in mid-cap stocks. Then only there would be a trend change. Otherwise, this uptrend that is continuing might actually continue, however much we think that any correction can come in at any point in time. But that has not been happening over the last 3 months. So till such time it really happens, we need to be circumspect about any bearish view on the index. At least the daily chart was showing that. Now what I want to show you is the 15-minute chart of the CNX midcap. What do you see? That from after 17th of July, on the last 4 days, what do you see? Almost from the left side, that sharp rise. After that, it is still, the gradient can be considered that the gradient is still up. If you do a regression line, that would be actually upward sloping. But we see that there has been some bit of distribution. Then there was recovery again on both Thursday and Friday. If you look at the total chart, you will see that at the bottom, the 20th of July and 21st July, there had been distribution and slow downswing. It has, in the 15-minute chart, the 9 unit, 20 unit and 50 unit, all three have been broken. It is signaling a test of the 200 unit moving average, which is around 36,600. That might be tested. Of course, it has not been tested over the last 4 trading sessions or 5 trading sessions. But now, only when 36,600 gets taken out by the CNX midcap, even a 15-minute chart would not suggest that there can be any negative movement or any trend change or some kind of a correction setting in. So your pivot should be 36,600. If that gets taken out by the CNX midcap, then there is some possibility that it may show a bit of a correction, at least a short-term correction. Hey, have you liked my presentation? Then press the like button, subscribe to my channel, and don't forget to press the bell button so that YouTube sends you recommendations, sends you notifications whenever I post a new video. We are going to review 3 stocks as promised. Review Root Mobile, we're going to review Jubilant Foods, and there would be one more. Jubilant Food was reviewed last week, but Jubilant Food has actually disappointed in a major way, and it has fallen below the 470 mark. And now look at this. What you now see on your screen is the 15-minute chart of Jubilant Food. It shows a major distribution, especially after the movement on the 19th of July. For the last couple of days in the last week, it showed major distribution. Earlier also it was testing. So this was the third test for below 470 mark. First it was say around the 14th of July. Then there was almost a test of 470 or so. That was 18th of July, and then on the last day that was 21st of July, Friday. It fell below that and closed there at 465. So I suggest you book losses and get out. Now the chart that you see of Jubilant Food, this is the daily chart. This is a year-to-date chart of Jubilant Food. The bullishness that was seen, on the basis of which we gave the buy call, that has been negated by this stock by falling below 470. So I would suggest that there is no point holding on to this Jubilant Food. It is a story gone sour. Exit this position right away. Jubilant Food is a sell. We now review Route Mobile. Route Mobile we have not recommended in our this stock review program. We haven't recommended it on YouTube, but Route Mobile, I have got lots of queries. I've been requested through email as well as through other social media that Route Mobile I cover, because Route Mobile, there was a big fall. Route Mobile was going really well, but then all of a sudden a circular transaction, that is Route Mobile promoters are selling off their 56.57% stocks to a Belgian government telecom company, and after that these promoters, erstwhile promoters, will buy a certain percentage of that stake again. You see, market doesn't like this kind of round trip transactions and all that. So market got very jittery, and Route Mobile fell very sharply. The kind of fall that has happened in Route Mobile, we now need to wait and see whether Route Mobile tests its 200-day exponential moving average or not. If 200-day exponential moving average, which is around say 1391 now, it is around 1400. So if 1400 level is taken out by Route Mobile, then it would become very bad. But it appears that we are being given to understand by the promoters that it would not actually affect the company's performance, or it will not have any material impact on the company's fundamental performance. But as you know, market gets very apprehensive in such situations. That's why there has been a huge sell-off, and now after this huge sell-off, if the stock really manages to stay above say 1400 level, or better still above 1500 level, then there would be a consolidation. Maybe this thing will pass. But suppose if it were to fall further, and it were to fall below 1400 level, the 200-day exponential moving average level, then this should be sold off. Is our third stock under review today. Deepak Nitrite is a blue chip company. Deepak Nitrite we recommended at lower levels. It did perform well, and after that there was a sharp fall. Sharp fall might have been precipitated with the concern of commodity prices going down, and also there has been a death among the senior executive. There was some kind of a jittery in the market and the stock failed. But Deepak Nitrite is one company that has performed exceedingly well in the past, and it has been correcting itself after the 2021 high around 3000 level for nearly 20 months. Now it is about to give a breakout. The breakout did happen, and again it has come down. It might consolidate, but I feel that it is going to go up. I must tell you it is a disclosure from my side that this is one stock I personally hold in my portfolio, and I have confidence that Deepak Nitrite is going to go up. I'm not saying that you buy right away, watch it out, but if you have bought earlier, unless it falls below 1740 levels, you should not be exiting. Let it stay below 1740 or 1700, then only it becomes a sell. Otherwise, from a technical point of view, it doesn't become a sell. So if you take my suggestion, just as I'm doing, that I'm continuing to hold on to it, you also continue to hold on to the position. Deepak Nitrite is most likely to bounce back going forward. Give it a longer term horizon, at least a couple of years or more. You will be adequately rewarded. That is what I tend to think. Hey, have you liked my presentation? Then press the like button, subscribe to my channel, and don't forget to press the bell button so that YouTube sends you recommendations, sends you notifications whenever I post a new video. Now, the icing on the cake, the stock recommendations. There would again be 2 new stocks that I'm going to recommend for this week. Of course, as I said, that the recommendations are not just for the weeks. It could be a longer period of time. Watch out. Here, what we are doing is that we are repeating our recommendation. What you now see is the LIC of India 1-year chart. I'm using this 1-year chart to give you a perspective as to how the LIC stock behaved over the last 1 year. We gave a recommendation to buy it at a very low level. Now it has moved up. It has taken out the 200 exponential moving average, and after that it consolidated around that 200 exponential moving average around 620, and only on last Friday it shot up from lower levels of 623 to about 642 and finally closing at 636. LIC is a renewed buy. LIC looks good. LIC looks good. LIC is a renewed buy. We are now looking at higher levels. Since LIC, even in a market which is otherwise showing quite a bit of seesaw movement, LIC's steady performance, not falling much, steady at around 620 for most part of the week and thereafter jumping up again. Of course, it has not yet crossed the earlier high around 650 or so. Now it is going to go up. It will cross that earlier high. That is what I am expecting. My initial target would be something like 679. 679, there was a particular day in March when there was a high around 679. So that high I've used to come up with these Fibonacci retracement projections. So 679 is definitely our first target. And then the next targets would be 719 and 740. So with these 3 targets, I would suggest that LIC can be bought. Now, if you look at it, this is also a daily chart, but this is a year-to-date chart. That means from 1st of January till date. What do you see? You see that the stock is actually consolidating. Stock is consolidating, and it is a flatbed accumulation pattern where in the middle it tested the low around 550 and thereafter slowly started moving up. So LIC definitely calls for a fresh buy recommendation. I have picked it up again because lots of small investors have invested in LIC. They could not buy at lower levels. So those who are looking for a fresh opportunity to buy into LIC, this is the time. So I would say that 675 to about 683 would be the first range, and after that those levels above 700 might well be reached. So buy LIC. If you have to put a stop loss, I would say that LIC is not a trader's stock. LIC doesn't give that kind of movements. So if you are an investor, now your stop loss should be 575 and expect it to go beyond 700. Continue to hold on. It could possibly be going even further up. Our second recommendation is Amara Raja Battery. Amara Raja Battery I have chosen because most of the stocks are not showing any kind of real strength. Amara Raja Battery is also not showing any strength. If you look at the daily chart, that is the 1 year chart in front of you, which is from last year August to the month of July this year, you can see that it went up above 700, and from there had been a sharp fall because there has been some selling from some quarters, say the foreign institutional investors and others have sold. There is one FII that sold heavily. But one thing I must highlight here, whenever a stock falls in this manner and comes to test its 200-day exponential moving average, the faint green line below the last major red candle with the volume red candle, you will see that it is slightly lower, around say close to about 600 level. The 200-day exponential moving average is located at 604. So, and the last close is 625. Whenever that kind of a correction happens and there is a sharp fall, you ought to understand that this is actually a culmination of a persistent selling spree which took the stock down. But Amara Raja, whenever it fell in such a manner that 3-4 days or a week or so, it fell sharply. After that, it once again starts moving up, and it moves up slowly, but it moves up again. And this time, my reason for choosing Amara Raja is that it is almost testing its 200-day exponential moving average. Even if it were to fall further in the coming week, but if it were not to stay below the 200-day exponential moving average, one should be buying the stock. Where should be your stop loss? Your stop loss should be below, say, 575, or better still, you put a stop loss around 560 and hold it for longer term, because Amara Raja is not just EV batteries and there is a saturation in IC batteries, that is internal combustion engine batteries. It has a market share of 60% in mobile and say laptop batteries. It is not a bad stock. It has been sold off by some major player. That's why it has come down. But if you are a patient investor, Amara Raja is worth betting into. Briefly, I would like to show you the 15-minute charts. Why? Because look at the sharp volume bar and the price bar. Price bar is deep red, volume bar is slightly muted red at the bottom. There was a huge selling, the price fell, and the volumes were very high. After that, in the 15-minute chart, what you show is that some kind of a consolidation, then again a selling spree, and then it fell quite a bit and came down close to about 610 or so. From there, 605 or 4 is our 200-day exponential moving average. So we can say that it was almost there on the daily chart, close to that 200-day exponential moving average. A 15-minute chart, it is after testing the levels of around 610 or so, it consolidated, moved up, finally closed at 625. So this is actually a good buy for a patient investor. If you are willing to give it a chance, then maybe over a period of time it can actually show a good movement on the upside. Put a stop below 575 on closing price basis and buy this stock. The targets that I'm looking at is 701, 718 and 742. These three targets, the last target I'm expecting it to reach there by 6 to 9 months. So from 625 to about 742 is a good nearly 20% upswing. So you can buy this. Chances are it will perform, especially after the major sell-off is already through. It tested the 200-day moving average. I thank you all. Thank you for being with me. We have done quite a bit. Please comment in YouTube so that we get to know how you feel, what you need more, how this can be done better. Thank you.